Businesses just aren't spending right now, and nobody seems to know why. Central bankers are blaming tariffs, uncertainty, trade, and slow economic growth. They're all wrong. I'm going to tell you what the real answer is in today's video. The puzzle of soft business investment is racking the brains of central bankers. They're out there blaming trade uncertainty, tariffs, global growth, all kinds of other quote-unquote uncertainty. None of it makes any sense. This is the same kind of uncertainty that's been inherent in politics, and it's been inherent in growth forever. Yet businesses aren't spending. And they talk about these T's, tariffs and trade. But there's a third T that explains it, and it's technology. We are in the age of disruption, and central bankers just aren't understanding what it means. Here's the problem. Name almost any business, and I can tell you how it could be obsolete in 10 or 20 years. Technology is changing more quickly than ever before. We went from a period where the internet was new and novel and seen as a way to make money to a period now where the internet is destroying businesses. Technology is changing so fast in so many ways that almost every business model is vulnerable. In that scenario, if you look at businesses and their decisions, they're sitting back and saying, listen, I don't know what's coming next. I don't know what to invest in. Think about it. If you own a car dealership right now, are you investing in rebuilding it? No, you're terrified about electric cars. If you own a mattress business, are you going to rebuild the showroom? Maybe not. You might be terrified about online delivery of mattresses. Let's take a step back and look at the huge tax break that Gary Cohn from Goldman Sachs designed for the president to stimulate the economy. Now, a popular hot take is that it was all for rich people and to give them money anyway. Sure, maybe. But consider this. What if Gary Cohn was really trying to design a program that would create business investment? What if he did and it just failed? I think that's what's happened. The models say if you give companies capital, if you give them incentives, they will invest. But if your concern is that your business model will be obsolete in 5 or 10 or 20 years, then it doesn't matter how much capital is available, you're not going to invest because you just don't have that long-term confidence. And I really don't see how anyone can have long-term confidence in their business model. The thing about disruption is that it's here to stay. Tariffs will be resolved eventually, but technology isn't going to stop. And I think every business that's out there truly is vulnerable. That's what's so scary about this. Look at a company like Walmart, biggest employer in the United States. What are they investing in right now? It's technology, it's web, it's online. And, for every dollar they spend in that, 20 years ago, they would have spent $100 building stores and expanding their model. But right now they're shoring it up. And how many people do you really need to build a new website to improve your online delivery? So what's the trade here? We're going to have central bankers pushing on a string, lowering rates, wondering why business investment doesn't come, or believing that it's just around the corner once tariffs are resolved or something gets a little bit better. And we'll have governments trying to play the same game, driving down business taxes, taking on big deficits to try to stimulate the economy. None of it's going to work, and we're going to dig deeper and deeper into this hole. What works in that environment? Obviously gold. Gold, bonds, any hard asset that is always going to be in demand, or any business model that's unshakable and can provide some long-term, capital growth, is going to do very well in the next 5, 10, 20 years. Whereas those that can be disrupted are going to find their valuations permanently impaired, while the currencies of the countries who chase this kind of growth are going to find themselves creating asset bubbles in those things like real estate and hard assets. So we're inevitably headed into this new environment. I think it gets much worse before it gets better. Hang in there, trade it. For Forex Live, I'm Adam Button.